Hello traders. Welcome to today's Pairs of the Day update. Let's take a look at the latest movements and key factors affecting the Euro, US dollar, USD, and Canadian dollar, CAD. On Tuesday, the Euro to US dollar pair saw a modest rise but struggled to break through the critical 1.1200 level. Despite some bullish momentum, the Euro remains confined below this key resistance. Bulls are finding it challenging to push the pair higher, indicating a period of consolidation or potential resistance at this level. Looking ahead, all eyes will be on the EU inflation data set to be released on Friday. The Pan-EU Harmonized Index of Consumer Prices is anticipated to show a slight dip in inflationary pressures, with a forecasted decrease to 2.8% year-over-year from the previous 2.9%. This data could influence the euro's performance and provide insights into future monetary policy adjustments. Fed Chair Jerome Powell's recent remarks suggest a looming rate-cutting cycle, fueling market speculation and weighing heavily on the US dollar. Powell's comments have heightened expectations for rate reductions, contributing to the USD's broad-based weakness observed in recent trading sessions. This week's focus for the USD will be on key economic data, including the Q2 GDP figures and the Personal Consumption Expenditure (PCE) price index. The GDP is expected to remain steady at 2.8% annualized, but the PCE price index, set to be released on Friday, will be closely watched. A higher-than-expected reading could stir market jitters and affect the USD's trajectory. On Tuesday, the Canadian dollar showed a broadly softer tone against its major peers but managed to strengthen against the US dollar. As the USD weakened, Canadian dollar to US dollar experienced its third consecutive down day. This trend highlights CAD's relative strength amid a weakening greenback. Canada's economic calendar remains quiet until Friday, when the Q2 GDP data is scheduled for release. The annualized GDP growth is expected to ease slightly to 1.6% from 1.7%. However, market attention is primarily on the upcoming US inflation data, which could overshadow Canada's economic updates. Now, let's move on to the technical analysis and check out the charts. We have opened the 4-hour chart of Euro to Canadian dollar. The price is currently below the 20-period moving average. The stochastic indicators are moving slightly higher near the oversold area, suggesting a potential downward movement. For support and resistance levels, we have identified 1.4994 and 1.4949 as support, with resistance levels at 1.5067 and 1.5109. If the price moves lower, it may find support around 1.4994 and potentially extend down to 1.4949. On the upside, resistance could be encountered near 1.5067 or potentially extend towards 1.5109. Now, let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is also below the 20-period moving average. The stochastic indicators are moving inside the oversold area, indicating a potential downward movement. For support and resistance levels, we have identified 1.3398 and 1.3343 as support, with resistance levels at 1.3500 and 1.3561. If the price moves lower, it may find support around 1.3398 and potentially extend down to 1.3343. On the upside, resistance could be encountered near 1.3500 or potentially extend towards 1.3561. Always remember to consider your risk management strategy before entering any trades. That's it for today's update. See you in the next video.